Welcome to BullionIQ, the place where we cut through the noise and talk about crypto and finance in a way that actually makes sense. Let me hit you with something that will instantly grab your attention. In just 48 hours, XRP whales unloaded 190 million tokens, and for a moment, it honestly felt like the captains were abandoning a sinking ship. As an XRP holder myself, seeing that kind of move is like watching all the VIP guests leave a party early. You're just standing there thinking, do they know something I don't? Is something bad about to happen? Or is there another secret party happening somewhere else? That single thought alone is enough to make anyone feel uneasy, especially when real money is on the line. The data came from a well-known analyst, Ali Martinez, who pointed out that wallets holding between 1 million and 10 million XRP were behind this massive sell-off. In only 2 days, about 190 million XRP was sold, which at that time was worth around $402 million. That's almost $500 million moved out of the market like it was nothing. What makes it even more shocking is that this wasn't just a one-time event. These same whales have actually been slowly emptying their bags for a couple of months now. Back in early September, they were holding a combined total of 6.8 billion XRP. Today, that number is closer to 5.22 billion. That means in just 2 months, they have sold off roughly 1.58 billion XRP tokens. On average, these whales have been selling around $50 million worth of XRP every single day. Imagine that for a moment, someone hitting the sell button every day with that kind of money. Of course, the price started to feel the pressure. XRP dropped about 14% over the past week and around 13% in the past month. A key support level around $2.15 was broken, and at the time of recording, XRP was sitting in the low $2 range. If this downward momentum continues, analysts are pointing to possible support levels at 191 and even 173. A fall to 1.73 would mean another 18% drop from current levels, and for any investor, that is not exactly comforting news. Like many of you, I also felt that uncomfortable feeling, that slight fear in the back of the mind that says, am I missing something important here? So I went into our community spaces to see how others were handling this. Some people were clearly worried and thinking about jumping out. Others were calm and focused on the bigger picture. I found myself right in the middle. One part of me wondered if it was time to panic, but the other part remembered that in crypto, big moves like this don't always mean what they appear to mean on the surface. And that is where the story takes an interesting twist. While whales were selling on the open market, another group of investors was doing the complete opposite. They were buying XRP through newly launched spot exchange-traded funds. Just recently, the first US-based XRP spot ETF was launched by Canary Capital under the ticker XRPC. You would expect that with all this whale selling, an ETF like this might struggle, but surprisingly it didn't. In just the first week, it brought in nearly $49.5 million, and since its launch, it has attracted around $292 million in total inflows without a single day of net outflows. So, here we are, watching whales dump massive amounts of XRP, while at the same time, traditional investors using stockbrokers are rushing in to gain exposure through ETFs. It almost feels like two completely different worlds colliding at the same moment. One side looks scared, the other looks confident and hungry for opportunity. This is where things start to get really interesting. When you step back and look at what is happening with XRP right now, you start to realize that there are two very different types of investors in this market, and both of them are sending very different signals. On one side, you have the crypto-native whales, people who have been holding XRP for a long time and understand how the blockchain world works from the inside. On the other side, you now have institutions and traditional investors who are entering through regulated financial products like ETFs. These are the kinds of investors who don't usually care about short-term noise, social media panic, or daily price swings. They are thinking in terms of years, not days or weeks. And that difference in mindset is extremely important because it might be the key to understanding what is really going on. A lot of people automatically assume that when whales sell, they must know something bad is coming. Sometimes that is true, but not always. In many cases, whales sell simply because it is a smart financial move for them at that moment. These people got into XRP at very low prices years ago. Some of them bought it for just a few cents. So even at $2 per XRP, they're already sitting on massive profits. It makes perfect sense for them to take some of that profit off the table, especially when the market has been uncertain over the past few months. This doesn't always mean that XRP is about to die or fail. It can simply mean that these early holders are locking in gains while they can. At the same time, these new ETF investors are stepping in because they see something different. To them, XRP is not a risky gamble. They see it as an established digital asset that has survived regulatory battles, market crashes, and years of uncertainty. They see a project that has partnerships, real-world use cases, and a strong community behind it. Most importantly, they now have a way to invest in XRP without having to touch a crypto exchange or manage a digital wallet. They can just buy it like a stock through their normal investment accounts. That convenience opens the door to a much larger pool of money. This is why the ETF launch is such a big deal. It is not just about one product. It represents a bridge between the traditional financial system and the crypto world. When big financial firms start offering ETFs based on cryptocurrencies, it means they believe there is real demand and long-term value. These companies do not launch products for fun. They do deep research, they look at data, and they only move forward if they believe they can make serious money. The fact that the XRP ETF pulled in almost $300 million with zero outflows tells us something important. There is strong, steady interest in XRP from a different kind of investor. So we have to ask ourselves a key question. What if the whales are not running away from XRP, but simply making room for a new class of investors to step in? What if this selling pressure is actually part of a larger transfer of ownership from early crypto insiders to big institutions and retail investors in the stock market? This kind of change has happened before in other assets. It often happens quietly, with a lot of fear and confusion along the way, before a stronger and more stable price structure is built. Another thing to consider is market psychology. When price goes down and negative headlines spread, weak hands sell and strong hands buy. That is a basic rule of investing. The average person reacts emotionally. They feel fear, doubt, and panic. But experienced investors look at fear as an opportunity. They see lower prices as a discount. So while social media is full of people calling the end of XRP, others are looking at the same chart and thinking this might be the best buying opportunity they will get in a long time. I am not here to tell you to buy or sell. That is your personal decision. But what I will tell you is this. Moments like this are the ones that separate emotional investors from strategic investors. This is where knowledge, patience. Now that we understand the current whale activity and the ETF inflows, let's take a closer look at what this actually means for XRP in the bigger picture. One thing I always tell viewers on BullionIQ is that price movements alone don't tell the full story. Yes, 190 million XRP being sold in 48 hours looks scary at first glance, but context is everything. The crypto market is made up of cycles, and these cycles often include periods of panic selling followed by strategic accumulation. It's a pattern that repeats itself over and over, and understanding that pattern is what separates informed investors from those who react emotionally. XRP is no stranger to volatility. We have seen it withstand major challenges, including the SEC lawsuit that created huge uncertainty in the US market. Yet, despite all that, it has survived, evolved, and continues to grow. This resilience is important because it shows that XRP has a strong foundation, not just hype. Whales selling now could simply be part of a broader reallocation strategy, moving assets where they see better opportunities, while new investors step in through ETFs. This transition is a natural part of maturing markets, and it may not be the crisis that casual observers fear. Another factor to consider is institutional interest. The introduction of XRP spot ETFs is opening the door for money that previously would not have touched crypto to flow into the market. These are institutional investors and traditional traders who are used to regulated products. Their approach is long-term and measured. They are not influenced by daily social media chatter or short-term FUD. When you combine this institutional interest with ongoing retail adoption, you begin to see a much broader support network for XRP beyond just whales and early adopters. This dual layer of market participants can stabilize the price over time and create opportunities for those who are patient and strategic. It's also important to understand supply and demand dynamics. The recent whale sales may temporarily increase supply on the market, but at the same time, ETF inflows are actively creating demand. The ETFs purchase XRP to back the shares that investors buy. So even as whales sell, institutional and retail interest is absorbing a significant portion of that supply. This push and pull between selling and buying is creating a complex market structure which can appear chaotic at first, but often leads to more stable conditions once the initial volatility settles. From my perspective as an investor, the key is to focus on what I can control. I can't control what whales do, and I can't predict exactly how ETFs will perform day to day. But I can control my strategy, my allocations, and how I respond to these market events. That means holding my core XRP position, staying diversified, and exploring new ways to grow my crypto portfolio passively. One example is projects like Unity nodes, where I can earn crypto rewards by supporting a decentralized network. This approach reduces my reliance on short-term price movements and allows me to benefit from multiple streams of crypto activity. Finally, mindset is everything. It's easy to panic when you see a large whale selling millions of dollars in tokens. But it's far more productive to respond with curiosity and strategy. Asking questions like, why are they selling? What opportunities does this create? And how can I position myself for the long term is far more useful than reacting out of fear. This kind of thinking is what turns market volatility into an advantage. It's crucial to focus on practical strategies for anyone holding XRP right now. One of the first things I emphasize on BullionIQ is preparation. The market is volatile, and events like the 190 million XRP sell-off can cause short-term panic, but being prepared means having a plan in place, knowing your entry and exit points, and making sure you have access to multiple platforms. Personally, I always ensure I'm verified on several crypto exchanges. This isn't about overcomplicating things. It's about having a safety net. If one exchange experiences downtime or delays withdrawals, I can quickly move to another without missing opportunities. It's a simple step that can save a lot of stress, especially in fast-moving markets. Another aspect of preparation is understanding your own risk tolerance. Not everyone should be exposed to large positions in volatile assets like XRP. I recommend that investors define what percentage of their portfolio they are comfortable having in crypto and stick to that allocation. Emotional decisions often lead to panic selling or buying at the wrong time. By having a clear limit, you can reduce stress and make more rational decisions. This is particularly important when whales are selling heavily and market sentiment appears negative. Diversification is another key strategy. While holding a core position in XRP, I also look for other ways to grow my crypto exposure. One method I've personally explored is Unity nodes. For those unfamiliar, Unity nodes allow you to use your smartphone to support a decentralized network, contributing to telecom infrastructure while earning crypto rewards. This method isn't a replacement for investing in XRP, but it adds another layer of income and reduces reliance on a single asset. I've started with a small number of devices to test the system, and over time I can scale it up. What I love about this approach is that it turns everyday technology into a tool for earning crypto, creating passive income while supporting a useful project. It's also important to pay attention to new market developments like XRP ETFs. These ETFs represent a significant shift in how investors can access XRP. They are regulated, accessible through normal stock accounts, and attract a different type of investor who is looking for long-term exposure rather than short-term speculation. Monitoring the flow of funds into these ETFs can give valuable insights into market trends. While whales sell, ETFs are absorbing liquidity, which can create a stabilizing effect over time. Understanding this balance is essential for informed decision-making. At the same time, education remains critical. Joining communities like the BullionIQ Discord helps investors stay informed and see different perspectives. Discussions with other crypto enthusiasts and analysts often provide insights that you might not find on mainstream media. Being part of a community allows you to compare notes, ask questions, and avoid making impulsive decisions based on incomplete information. Now that we have discussed preparation, diversification, and mindset, it's time to examine the potential long-term impact of the recent whale activity and the influx of ETF investments on XRP. The key to understanding this is to look at both supply and demand factors, as well as broader market trends. When whales sell, they are increasing the available supply on exchanges, which can put downward pressure on the price in the short term. However, the introduction of ETFs is creating a steady, predictable demand from investors who may not have participated in crypto before. This combination of selling and buying creates a balancing act in the market, which could lead to more stable price behavior once initial volatility subsides. For long-term holders, it's crucial to separate short-term price fluctuations from the bigger picture. While headlines often focus on panic selling or dramatic market moves, the reality is that XRP has continued to develop and expand its ecosystem. The token has survived regulatory scrutiny, maintained partnerships with financial institutions, and created use cases that extend beyond speculative trading. These fundamentals provide a strong foundation, and when paired with new investment channels like ETFs, they suggest that the network is gradually becoming integrated into traditional finance. One interesting aspect to watch is how whale behavior evolves in response to ETF activity. If ETFs continue to attract steady inflows, whales may adjust their strategy. They could either return to accumulate more XRP, anticipating future price growth, or continue to diversify their holdings into other assets. This dynamic creates opportunities for informed investors who understand these patterns and can strategically position themselves. Timing becomes less about reacting to fear and more about observing trends and aligning with broader market movements. Another important point is risk management. Even in a positive scenario, Cryptocurrency markets remain highly volatile. Investors should always be prepared for sudden price swings. That's why maintaining multiple exchange accounts, setting clear portfolio allocations, and having diversified income streams like Unity nodes or staking programs can be invaluable. These strategies not only reduce stress, but also allow investors to take advantage of market opportunities without being forced into panic decisions. Education and community support also play a vital role in navigating this environment. Engaging with other investors, analysts, and educational resources helps you see beyond headlines and social media speculation. For example, discussions in the BullionIQ Discord provide real-time insights and perspectives that can guide your strategy. Learning from a variety of viewpoints ensures you are not relying solely on your own interpretations or the hype around daily price movements. This approach helps you make decisions based on research, data, and analysis rather than emotions. Finally, it's important to emphasize mindset. Seeing whales sell hundreds of millions of dollars worth of XRP can feel unsettling, but responding with curiosity rather than fear is key. Ask questions. Why are they selling? Are these short-term actions or part of a broader strategy? How do ETF inflows affect overall market dynamics? By staying calm, informed, and strategic, you can turn moments of uncertainty into opportunities for growth. Long-term thinking, patience, and a focus on fundamentals are what separate successful crypto investors from those who react impulsively. Now, we've reached the final part of our deep dive into XRP's recent whale activity and ETF inflows, and it's time to put all of this into perspective. First, let's recap what we've seen. In just 48 hours, whales sold 190 million XRP, a huge movement that created short-term panic in the market. At the same time, the first US-based XRP spot ETF launched and attracted hundreds of millions of dollars in inflows. This dual scenario shows us two contrasting forces: traditional crypto whales acting strategically and new institutional investors entering the market in a calculated long-term way. Understanding this balance is key for anyone holding XRP or looking to enter the market. One of the main takeaways here is that short-term fear doesn't always equate to long-term risk. Whales often sell for reasons that have nothing to do with negative fundamentals. In many cases, they are simply reallocating profits or preparing for other opportunities. On the flip side, the ETF inflows show us that mainstream finance is now participating in XRP in a regulated, controlled manner. This suggests growing acceptance and integration of XRP into broader financial systems, which can have a stabilizing effect over time. As investors, recognizing this contrast is crucial. One side is about profit-taking, and the other is about structured accumulation. For practical purposes, this means having a clear strategy is more important than ever. I personally focus on holding my core XRP positions while diversifying into other opportunities like Unity nodes, staking, or other solid crypto projects. This reduces dependency on a single asset while still allowing for potential gains. Setting clear portfolio limits, staying verified on multiple exchanges, and monitoring both market sentiment and institutional flows are all part of the strategy. Essentially, you want to be prepared for any scenario, whether the price dips temporarily or begins a sustained rally. Another key point is risk management. The crypto market is inherently volatile, and even well-informed investors can experience sudden swings. This is why I always recommend diversification and keeping multiple channels open. If one exchange has technical issues, you need alternatives ready. If one investment isn't performing as expected, having other projects generating returns can balance your portfolio. These safety measures reduce emotional stress and allow you to make decisions calmly rather than reacting impulsively to fear or hype. Equally important is staying educated and connected. Communities like the BullionIQ Discord are invaluable for sharing insights, seeing different perspectives, and understanding market developments in real time. These spaces allow investors to ask questions, discuss strategies, and learn from each other. The knowledge gained from these interactions can often be the difference between a poor decision driven by panic and a strategic move informed by data and analysis. Finally, mindset matters more than anything. Seeing whales sell millions of dollars in XRP can feel intimidating, but if you approach it with curiosity and strategy, you can turn it into an opportunity. Ask yourself, why are these whales selling? What are institutional investors thinking? How can I use this moment to position myself strategically without overexposing my portfolio? By thinking this way, you're responding intelligently rather than reacting emotionally. In conclusion, the current XRP situation is a mix of fear, opportunity, and evolving market dynamics. Whales are selling, but new investors are stepping in through ETFs, creating a unique environment for strategic planning. Holding your core positions, diversifying into other crypto projects, managing risk, and staying connected with informed communities are all essential steps. By combining knowledge, strategy, and patience, you can navigate this market confidently. Remember, crypto moves fast, but a clear plan and calm mindset are your greatest allies. Stay informed, stay strategic, and most importantly,